Hello and welcome to this special show called New Age Investing with ESG, presented by Mirae Asset and partnered by ET Now, investing obviously is really important. It's all about what we're doing with our hard-earned money, where we're investing it so that it can grow and fulfill all our financial needs. But the topic of this discussion today is really important. It is new age investing with ESG. So what exactly is ESG and what is this new age investing? What are some of these trends that are developing? To answer all those questions, I have two experts with me. Allow me to introduce them to you. First up, we have Sheila Watermert. She's the Executive Director for Strategic Partnerships at Sustainalytics. And we also have Harshad Borauke. He's the Head Research Equity at Mirae Asset. Thank you, Sheila and Harshad, for joining me here today. Sheila, my first question to you is about ESGs. If you could just briefly explain to us what ESG means.
Sure. And thank you, Sumit. Very happy to be here. And nice to speak with you as well, Harshad. As you mentioned, Sustainalytics, which is actually now a Morningstar organization, does indeed focus on company and country level ESG ratings. And I'm happy to further define this. ESG stands for Environmental, Social, and Governance. These encompass factors that consider risks, impacts, and even alignment to environment, social, and governance ecosystem that contributes to a more sustainable economy and even world. Why is this important? Why investors should be thinking about this? Well, in our experience, we're seeing many behaviors across investors, corporates, and even individuals where they're not fully considering these issues as it relates to the risks they face and in general, the betterment of this world. But the reality is that we are facing these issues such as resource scarcity, data privacy issues, gender pay gaps, and even lack of diversity in the workplace that can have a profound effect on society. So therefore, by considering these factors, we can better position ourselves to mitigate important risks and then also capture significant benefits.
Fantastic. So it's really new age investing, as like the title of the show says. I want to move now to Harshad. So Harshad, you head the equity research at Mirae, and while Sheila has spoken to us about what ESG is, I'll come to you from the other angle. Why is it important for an investor like me, investors that are watching, or for a fund manager, all their fund managers at Mirae or in the mutual fund industry? Why is it important for them as well?
So, of the three, E, S, and G, as a fund manager, we have been till now actively focusing on the G part, which is corporate governance, apart from, I would say, financial analysis, which also includes quality of earnings and also the valuation. With regards to E, that is environmental, it was more about companies following all the necessary environmental regulations. And for the S, that is social, I think India was one of the first country, to mandate corporates to spend 2% of the profits towards CSR, that is corporate social responsibility activities. But all this is regulatory. And as we know, many companies go beyond regulatory requirement. Over the past, few years, awareness of environmental issues has increased a lot. Even in general population, led by unusual, I would say, climatic changes across the world. Better focus on ESG does ensure, better risk management for the corporates and lowers the probability of sudden, or I would say, severe shocks to the investors by lowering the occurrence of any tail events. The companies, I would say, who focuses on 3 Ps, that is planet, people, and profit, in its core, corporate code, or will be better placed from the sustainability point of view. In Nifty 50 companies, majority of them do publish sustainability report that communicates the social and environmental effects of the organization's operations about the ESG. Also, in some instances, companies with a better ESG compliant, so they have better access to funds, and also their average cost of capital could be lower.
Fantastic. Okay, that's really important to know. And thanks, Harshad, for putting it so in such a detailed manner and make it easier for the viewers. Sheila, but when you look at ESG, what is the trend that you're seeing? And I would love it if you could compare both on the global scale, what's happening around the world, and also in emerging economies like India? How are any trends that you're seeing that are emerging in sustainable investing?
Yeah, sure. And I would say that, our observations are very much in line with Harshad, what you spoke about as well as it relates to corporate governance focuses, and then even thinking about the E. So for instance, there seems to be a lot of interest in looking at ESG issues in an opportunistic way within India. Which is great. I mean, for example, we see such great leadership coming out of India in the renewable energy space. It really does showcase to us that there is a true understanding as to why it's important to align with a greener economy. But we do also hear a lot about the emphasis on wanting increased corporate governance and transparency in Indian companies, but also across emerging markets companies. So like many emerging markets companies, there is often a lack of disclosure coming from the companies around its governance practices.
Sheila, I'll come to you on the flip side. So the UN also has years ago come out with the SDGs, the Sustainable Development Goals, and part of what I believe ESG is also where, earlier businesses just used to focus on the single bottom line, as they said, the P, which is the profit, but then they started doing the people, the planet, and the profit. So my point is, ESG is great. It's required. It's very much needed, but that must be coming at a cost to the company. Or I mean, this is where I want your advice. You're the expert here. So how do they balance it out? Because as an investor and as the investors that are investing in ESG companies, how are you seeing that balance out? What are people talking to you with regards to ESG companies and investing in these companies?
Sure. As it relates to investor behaviors on these ESG companies, we do see that those companies that are integrating ESG initiatives, such as further protecting their own operations against particular ESG risks, such as carbon risks, bribery and corruption, and so forth, are positioning themselves well for longer term profits or longer term sustainability in a sense. And so from that perspective, I think when we do look at those issues that are most material to a company, and when companies are positioning themselves to manage those risks that they're exposed to, then we find that those companies are indeed avoiding major reputational issues, major issues that they may face, thus offering them essentially a triple bottom line effect. Now, this, of course, does vary and it can be cyclical. But again, I think that when we think about a long-term economy, we are thinking about those companies that are best positioned. I will say when looking at, in general, when looking at the ESG landscape, indeed, as Harshad had mentioned, over the last few years, we've seen a proliferation of products in the ESG side of things come, whether it be mutual funds, ETFs, even institutional funds. What we've seen over the last few years, especially, however, is that there's been a significant accumulation of AUM in those products. And that has been very positive. So now it's not just asset managers coming out with products. Now you're seeing the actual effects of AUM transfer into those products. And where we're seeing the largest amounts of AUM transfer, especially on the passive side, is those individuals or those investors that are transferring a lot of their capital from broad-based benchmark funds into the ESG counterparts, where they're still, trying to look at similar diversification characteristics, similar tracking or low tracking error characteristics, but those ESG ETFs that are trying to, or products, I should say more generally, that are trying to capture the best companies within a particular industry. And so we do see, again, just from looking at global trends, we're seeing that that is the area where we're seeing a lot of capital or AUM transfer coming in there.
Sheila, my next question is also to you, and I'll request for you to first answer, and then I'll take it forward to Harshad. Is if you could give us some examples of the factors that Sustainalytics kind of tracks or looks at. So maybe if you could just share even one factor under the three pillars of ESG, it would help the viewers get a better sense of these factors.
Sure, happy to. So within our ESG risk ratings framework, which I'll just mention, while it is our flagship product, it is actually one of over 20 research products we create. But within that flagship product, we assess companies for a number of material ESG issues, such as carbon risk, bribery and corruption, emissions, effluents and waste, human capital, and corporate governance. And the specific issues that are assessed for each company are based on the sub-industry that that company sits in, where corporate governance is actually assessed for all companies across our universe. So I'll note, I think noteworthy here is instead of looking at kind of these issues as it relates to those E, S, and G pillars, we do believe that there's elements of the E, S, and G contributing to each of these issues. So instead, we look at what we call these material ESG issues.
Okay.
From there, we assess how exposed a particular company is to those risks, again, based on the sub-industry it sits in, but also as we consider company specificities. Mm-hmm. And then how well they're managing those risks, as I mentioned, where we look at the programs and policies that a company has in place, management structures, and so forth. So I'll give you a quick example. In an automotive company, for example, if a particular automotive company had a high percentage of electric fleet vehicle, they may be less exposed to carbon risks than some of its industry peers. Positively contributing to its score. But as we look at two dimensions, both exposure and management, if that same auto company wasn't disclosing their policies and programs in many areas, or if they had corporate governance issues, then that would negatively impact their score. So ultimately, we're looking at each of those material ESG issues and adding up the unmanaged risks, meaning those risks that the company is exposed to, but is not managing well.
Okay, fantastic. So Harsha, taking this a step ahead, how do you sit and analyze these numbers or any, I mean, just take us into the brain of a fund manager. How do they decide that, okay, this is the rating and this is a company that definitely we should be investing in or maybe not be investing in? Your thoughts?
There could be some energy company where it got impacted significantly because of some accidents, or there could be some mining company because of some environmental issues which were not met. So eventually impact on the shareholder is very significant, while the company might overcome it in a year or two, but from the shareholder value creation, I think it is a big blow which could happen because of such kind of events. So to that extent, I think when we try to analyze any company, and more so, if it is in the, I would say, slightly vulnerable sectors where there could be some ESG issues, let's say, had it been a company which deals with more with the people, so generally how had been the attrition rate within that. So these are some of the few things, which kind of gives indication of how the company has been, looking at the important factors which could at later point in time might come back and hurt them. It's a learning process for everyone as a whole, I would say.
True, very true. Yes, it is a learning process, and I think that's the beauty of it because it's continuously evolving also. Sheila, one important point that what Harshad also said is, like he said, it's a learning process. So India, I believe, is relatively new to this. Maybe abroad, of course, there are more companies that have been doing this for longer than some Indian companies. Any learnings, any pointers that you would be able to give to Indian companies based on what you've seen from their global peers as to, these are some things that definitely do look into, do manage well, so that, even the Indian companies that are watching our show have a clearer idea on how they can move towards a better ESG score?
Sure. And I would say that my suggestion would be to look at some of the leaders that are emerging in India. I mean, the truth is, as we've mentioned, Indian companies, like many emerging markets companies, tend to score lower across a global universe. We find that in general, emerging countries tend to have higher exposures to areas like natural resources, such as steel and oil, and traditional manufacturing. And they also disclose less than many of their developed country peers. But this is quite a broad statement. And in fact, if you look at it more from that best in class way that I mentioned before, where we're looking at the top performing companies within each industry, then indeed India does have many emerging leaders. So therefore, in an emerging market such as India's, I think it's extremely important to look at ESG factors, as I think it does signal the difference between those potentially keeping up with economic demands and trends versus those that are not, and thus identifying investment opportunities, or even for the companies, opportunities in which they can further improve efficiencies and so forth. And in terms of, yes, I'll just reiterate, for companies themselves, it is important to pay attention to some of these leaders, but also to the factors that investors are paying most attention to. And I think passive products is an excellent place to start because of that transparency they offer to the market around which factors are most important to them and, that are defining its inclusionary criteria.
Harshad, as we begin to wrap up our conversation here, just wanting to get your insights, just if you could maybe look into your crystal ball and tell us your thoughts on the way ahead for the market, overall market, and especially for ESG funds, because let's face it, the last few months have been seeing the markets go everywhere in the charts, all the way up, all the way down, all across. So just your sense for the way ahead.
We think there are three key important macro factors for anybody who invests in India. One is interest rate, second is currency, and third is oil price. We think all these three, macro factors are in a favorable zone right now from the investor point of view. But yes, obviously there are concerns related to recovery from pandemic, geopolitical issues, and in the near term, high fiscal deficit for FY21. But nevertheless, I think the positive news flow on the vaccine development is quite encouraging, and obviously it will be the eventual solution for the current pandemic. Coming to corporate earnings, this COVID-19 clearly is a one-off event, would significantly impact FY21 earnings. But for FY22 earnings, I believe that it should largely revert back to mean. From the indices returns point of view, they're almost recovered from their lows from March and April. But there are still some pockets, let's say like banking, which are yet to recover from their lows. So from the market's point of view, we find valuations quite reasonable or fair, I would say, from a long-term perspective, and would continue to advise investors to remain invested within their asset allocation. Coming to ESG, as I said, there are quite a few new ESG fund launches, and interest from investors also seem good. So we do expect meaningful growth in the ESG funds even in India going forward.
Fantastic. Thank you for that summing up, Harshad, and putting, shedding light on these important points. Sheila, coming to you for a closing comment from you on ESG factors, and just what is your expectation for the trend ahead, specifically in India and on a larger scale globally? Just your thoughts.
Sure. I do believe that, the global economy is really coming to a point where they are starting to recognize ESG into the more mainstream behaviors of the investment community. And we're seeing this through a multitude of different events, such as the EU regulations that are coming forth and various other global regulations. This, I hope, will help direct investors as well as companies to focus in on these issues that are most important for this long-term sustainable economy. What I will say, though, for the investors themselves is that it is important that they understand what their products or however that they're approaching ESG is being captured. Across different frameworks, across different products, ESG can be captured in a very different way. It can be integrated to further mitigate risks. It can be used to help align investments with one's values, or there can be products that are actually looking at more thematic areas or looking to create positive impact. And so it is important to understand exactly what the product is looking to do and how that aligns with one's investment criteria for that time.
Thank you, Sheila, and thank you, Harshad, for being a part of this show and for sharing your thoughts and your knowledge on this topic. Ladies and gentlemen, you've been watching a very special show called New Age Investing with ESG, presented by Mirae Asset and partnered by ET Now. And we hope that you're going away with more information and more knowledge about what ESG is and what are some of these new investment trends that are coming up and how it can help us all build our portfolio and improve our finances. Thank you so much for watching today.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.